Joining us now is Jeff Rosenberg, BlackRock's Senior Portfolio Manager for Systematic Fixed Income. Welcome, Jeff. Good to have you. Why are bond yields kind of lower lately when the trajectory for growth continues to look up and economic reports continue to show some real strength?
Yeah, I mean, we had a huge move. It was a resetting of interest rate expectations to the recognition that the combination of fiscal policy, following the Georgia elections, we changed the trajectory for fiscal policy. The combination of massive fiscal policy with massive monetary accommodation really is sparking historic expectations for growth in 2021. And that went through the bond market in terms of the rise in rates. We've had some consolidation from that. And I think that's where we're at. And we're at a new inflection point where we're pivoting from the conversation about where economic growth goes from the benefits from fiscal policy to when does the Fed recognize that substantial further progress and the implications of the tapering of the bond purchases that are to come.
And all of this is making you guys rethink fixed income allocations. What are you telling investors to do and how to change their traditional views here?
Yeah, it's sort of catalyzed by the negative returns, nearly over 3% negative returns in some of the major bond benchmarks in the first quarter. It's the impact of rising interest rates from a low interest rate environment and a real question in the outlook as to whether or not the Fed's forecasts, which are basically saying there's a temporary increase and then we go back to the old world, against the other side of the argument, which is, hey, maybe not so fast here. Maybe we're at an inflection point and the significant stimulus coupled with fiscal and monetary policy, might mean a different trajectory. If there is a different trajectory, then the transition to that higher real inflation and term premium world for the bond market means some significant periods of negative returns to the fixed income market. And that possibility really should concentrate the minds of investors about the need to rethink fixed income. It's an old slogan we had back in the post-GFC environment, but we're back again into that kind of environment where you really need to think about the role fixed income should be expected to play in this kind of transitionary environment.
Shepard Smith here. Thanks for watching CNBC on YouTube.